In this video, we're going to be going over the top stocks to watch this week. We're entering the first week of November, and there's a lot of movements in AI, in quantum, in space tech, and we're definitely seeing the data center market heat up as well. And we're going to jump into them here in this video. If you guys enjoy, make sure to hit the like button, consider subscribing, and if you have any questions, ticker symbols, or companies you want us to cover, comment them down below in the comment section. Go ahead, comment the ticker symbols for this week. How's everybody doing here? And what do we got for focus this week? Let's see what's up. All right. So we got Redwire here from Gazeeb, and then Elvis says CTM and Redwire. Let's go. Okay. Will, can you do a live for the Redwire earnings? We could probably do that. Let's jump into it. So first you got Redwire. Here in our Sunday stock talk, which, wait a second, I don't think I titled this live session correctly. Let me edit it. Sunday stock talk. Top AI, data center, space, and tech stocks. All right, there we go. So the first one is Redwire. So let's jump into it. That's going to be over here. That's from Who Said Redwire. We got Elvis. So we got a few people. Gazeeb said Redwire. Then you got Neil said Redwire. And Juana said Redwire. So we got quite a few. Let's jump into Redwire. So the first company, again, we're going to go into the space tech market. Space tech watch list. You can see some of the top companies we're watching this year. We've had some good returns on some space tech companies, primarily Black Sky. That's been a top one. And let's get into Redwire. We do have long-term positions in the company, but I think our overall position might not be positive on Redwire. Got to go check the Schwab portfolio. What we've seen happen with Redwire. The market has been growing pretty fast in the space tech market. And when I first met the company, I noticed they were really innovating. So there's innovation on the product side and more contracts for them recently. You can see they've been slowly building their market cap. They've continued to build this uptrend. And then recently, if we take a look at their overall direction, they've started to consolidate from left to right. Starting in August here, after a big sell down, right? So at one point, they were up to $30 a share. They sold down here into $7.50. And then they've been making some swings back up into that $9, $10 range. And right now, where they are at, we started to see them recover a little bit on Friday. They jumped from about $7.80 up to about $8.50. And then they closed out at $8 a share. So we're going to be watching with Redwire. Our next kind of target would be up into this level. See this level of resistance around 850. Okay, so that's the nearest level. That's about a 6% gain. But what we'd like to see is them up into this $10 range to $11 range. If not, see them get back up into some of these levels. We saw them enter earlier this summer in that $13 to $15 or $20 range. That's a 140% gain on Redwire. So why would Redwire do that? And the main thing we see with them is some of the contracts they've recently secured. I got Redwire, CTM. I see you guys. What's going on? Johnny, Juana, Biggie. What's going on? 9783. Mike, Z. What's going on? Ty Hop. Good to see you. So for Redwire's recent contracts, they have seen some revenue boosts over the last few years. They just signed this contract here, about a $2.6 billion deal. When you sign any deal like that, so you got to pay attention. When a space tech company is earning more today, 10 times more than they earned 5 years ago, you got to pay attention. And when the next frontier of the human race is seen as maybe AI technology, but primarily you could look at space tech as the true, equivalent of seeing humans sail the oceans for the first time, or start building airplanes for the first time. Space tech is the next frontier, And what's interesting about the last few years, if we take a look at the annual growth, and this isn't just Redwire, but in this case, it is Redwire, most space companies have seen more revenue over the last 5 years. Take a look at 2020 for Redwire, they're at $44 million. Then 2021, 137 million. 2022, 160 million. 2023, 243 million. 2024, 304 million. And then looking at the revenues into 2025, they're around the same levels, looking to come in around $250 million, but slightly dipped in that last quarter. But when you look at the annual growth rates, they look pretty good. See that revenue there. The negative net income hit them a little bit. When we were watching most space companies this year, the biggest concern was, okay, are they making money? And with Redwire, they're making money in revenue, but not really turning the net income. And we were really worried about them. I don't want to say worried, but we were cautious and we're not bullish on this stock earlier this year. Because if you look earlier in 2024, they had more liabilities than assets. Okay, so that's a major concern, and you wouldn't want to invest in something that has more debts, more liabilities than assets. You want to invest in things, obviously, that have more assets. And so quarterly, though, in 2025, in June, their assets surged, and now they're at 1.5 billion in assets with liabilities at just 448. So now assets are up 479%, because we've seen them actually raise some money. So the space tech company has raised some money. They've acquired some defense contracts, specifically with NASA, but primarily in defense. And they're also getting more money on the balance sheet. So if their current market cap is at 1.3 billion, I would expect them to make that recovery, because their market cap is lower than their total assets. Their revenue has been increasing year over year. I would expect them, if they can shore up that negative net income they came in with last quarter, that as their earnings loom, so again, they got their earnings coming up here. You can kind of see this article. All right, earnings are coming up here on what day? Earnings loom. I think it's going to be Wednesday. Wednesday, they have their earnings. So Wednesday, they come in with earnings here. What are we looking for? We're looking for about 75 million in revenue, with hopefully they cut that negative net income and come in and bounce back up into this level around this $10 range. It's about a 23% gain if Redwire can make that recovery, kind of continue this overall trend that they've been having for the last few months. You could see them build up, have some volatility up to $26, but at just $8 a share, they're looking to jump back up into that $10 range, about a 23% increase potential right now. So we'll watch them during earnings this week for sure. And I do have long-term positions in Redwire, just to disclose. But as far as short-term trades, if they start to continue, they've had some downward pressure here. Defense contracts and everything else have had some negative momentum because the government shut down. And they've kind of held below this EMA, this SMA. Kind of see them selling off. But they found a support on Friday after finding that support on the 23rd of October around 750. And so if they double bottom here, you're looking at a recovery of, again, about 20% on Redwire. So that's what we're going to be watching into this week. All right, so the next ticker symbol that we got here is going to be CTM stock. So CTM stock is in the defense market. They are a company that does agentic AI for the US government. And most agentic AI is going to be better, a lot better in the coming years. And most of the biggest problems that the US is having right now is actually related to having technology to deliver in the US. And so CTM has been holding above $1 a share. They had a super volatile day on Friday because they surged from $1.05 here all the way to 160 or $1.62. So a really big surge on Friday. See how that looks. See that 162 surge, 54% at one point, and then sold back down, all the way back down to about $1.05. So CTM, we continue to buy them. I've been buying CTM since about 87 cents a share. But what we saw is, we have a long-term position that's up on CTM. But I ended up buying, I think it was around $1.20 on Friday, and we saw it sell down here, what was about 6% on a small position. And so I actually have a position in Redwire or CTM right now that I'm expecting to recover. And then I also have one that's already very much in the green already. And so when we're looking at CTM in their current state of the market with the defense contracts heating up, we see that they're not just a one-trick pony. They had a $100 million contract earlier this year, which was greater than their current market cap, which is currently at around $108 million. And then they just secured a $66 million contract on Friday, which now puts them in an even better position to continue building the financials. So defense company with a lot of movement in the AI space, primarily their revenue is the thing I like, and their balance sheet. Revenue's been increasing year over year for the most part. Quarterly, they're increasing. They're up 21% this quarter. Revenue's up to 14 million a quarter, which is good for a $100 million market cap company. And then you look at their assets at $43 million with just 11 million in liabilities. So again, operating very healthy and disciplined for a $100 million market cap company. I see them as a nice play for the defense company out of Virginia. So we're going to watch here again. We saw them pull back down for the charts. They have that support level around $1 a share. So if they sell back down aggressively or something on Monday, we could look for a recovery back up into $1.15. CTM stock, again, I'm long on the company. I like them. I know that you got to have caution with companies valued around $100 million. And I don't really cover penny stocks at all. But there's something that just, for me, made a lot of sense around their financials. And we've seen them build, slowly but steadily build. And now that they came out with another contract and pretty good earnings last quarter, I would imagine they're going to be about $1.15 stock, easy, into the next week or two. That's kind of how that looks. Man, AMD is crushing it. See AMD continue to run. What else do we got going on here? All right, so can we go live for the Redwire earnings? Yeah, we could probably do that. Let's see here. All right, Big Bear AI says looks bright. We could take a look. Ty Hop says just subscribed. Awesome, man. Thanks for subscribing. Appreciate you. Yeah, so Big Bear AI is that the next one we want to take a look at here. AMD is the next one actually. And then we'll take a look at Big Bear. So AMD stock, overall, very long-term bullish for the company. And our AI says that that is the case here. One of the things to note about AMD, we've been covering the stock, and while everybody was calling it the advanced money destroyer, we saw it as the advanced money duplicator. And it's done exactly that. When evaluating a stock, you want to look at the overall market. And if you look at AMD, they've had some pivots in the last year or so. They recently pivoted from basically primarily gaming and semiconductors to getting a contract with Starlink. So if you search it up, you'll notice, I'm surprised people don't cover this. When you search AMD stock and Starlink, our content is the first pieces of content that come up. And the reason why is because this partnership with Starlink, if there was anything that I've noticed that has, in my experience, guaranteed growth for companies, it's when they're powering the underlying tech of the most powerful companies in the world. It's like the number one thing that if you see an indicator of a company that's powering a top tech company, then you're basically finding gold. Okay. So we found AMD stock, and what you want to look for and why AMD stock most likely will continue to grow into, I believe, $1 trillion company is because when you're looking at Starlink, they rely on AMD. So Starlink is the main semiconductors. The chips are powering SpaceX. And AMD pivoted to primarily into the data center space. And they made that adjustment in mid 2024. Okay. And 2024 was a record year for AMD. They came in at 25 billion. And then in 2025, they're on track to surpass that at over $30 billion. So revenue's growing like mad. Then you got the balance sheet is also looking really good, up over 60 billion. When I was looking at some of the buys and sells of institutions inside the machine here, this is a really great feature we just added in the machine. You can see the insider traders. And when it comes to like Lisa Su, we saw her buying more. There was a few sells, but primarily we saw mostly buys. So CEO was buying more. You had president buying more, chairman's buying more. Institutions, 70% were on the buys. You see BlackRock increasing their position. And there's a reason why Vanguard and State Street are buying more of AMD. And it's because, they're taking on OpenAI in a way. They recently acquired a company that is called Brium for inference, accelerating the inference of AIs. And so if you look at the processing power, no change in the processing power, but just simply the inference. So let's say running a ChatGPT type setup. On the left, you have Brium. It's like super fast. Okay, and really good. They're running on AMD. On the right, you have the SG-Lang setup, which is basically what most large language models run. And on the left, you just have so much faster response and processing of the answer. And so speed in AI is like everything. And so you see them get acquired by AMD. So AMD actually acquired Brium. I think that's going to be a big play for them to be able to grow into the competition of OpenAI, because all they have to do is basically keep creating chips, keep creating the data centers, and they're going to dominate more. They're in a position where they're seeing massive reliance because now people or companies are saying we don't want to only rely on NVIDIA. In fact, we want to have AMD power us. There's reasons for that, but primarily it's because also AMD has been seen to be even more effective than NVIDIA in certain instances, which is pretty cool. So I think that's going to be a key factor. Now, AMD's stock, if we look at where they're at right now, they're up to all-time highs, $258 a share. They basically gone up by 50% over the last month. Let's see if we can get it to pull up here. AMD, saying data unavailable. What's going on with my trading setup? There we go. Okay, so AMD is up to all-time highs. And you can see this just massive surge. The only thing is with this surge, now PE ratio is getting way up. And you got the previous resistance right here. This is when everybody was really scared of AMD and nobody wanted to touch it, and they were just continuing to sell down. We were really bullish around this point. We expected them to make it to $160 a share back in December and January. In fact, we even ran some Stockmate sales where it was like, if NVIDIA or if AMD hits 165 by January or February, you get Stockmate for free. It just continued to sell off because I had calls. I had big calls on AMD. And I've sold puts and I have long-term positions. In fact, two of our positions, AMD is up 150% this year. And AMDL is up 149%. And I think that it's almost scary how everybody's like so happy about AMD now that they're up to 267. But down here, everybody was disregarding them. Like that's why I'm not like saying this to brag or anything, but if you search AMD stock Starlink, you'll see a ton of our videos on Google. Thank you guys so much for all the support, because nobody was talking about the fact, like there's like nobody talking about the fact that AMD is powering Starlink. Like that is a massive catalyst for any company. And so we've been saying this since, gosh, if I go back on the videos, when did we post that? November, when it came out, when the news came out in November of 2024. You know, when we were covering at that time, when was that? That was, they were selling down here to 115 and on their way to $75 a share. And so it's like at this time, nobody wanted to buy them. Now they're up to 267. Everybody's like, AMD, everybody buy AMD. And I'm like, guys, the position, like, I'm not going to sell. I'm going to keep holding. But at this point, now we're looking at what is the RSI is overbought, way overbought. MACD is way overbought at this time. Now PE ratio is absurd, although they're going to dominate in the chip space. We know that. And the long term looks very promising. But I would expect a pullback on AMD. You know, we could see some pullbacks on AMD, probably back down into this level here, into this $225 range. It's a 12% sell down. If you're trading AMDL, which we don't normally hold, in fact, you could hold AMDL and AMD. AMD is normal, AMDL is the 2x, and you still won't get as much gains from AMDL because of the decay. So it's not a good one to hold long term, as you could see on the right there. I didn't really make out too well. I made out well, 150%, but you would expect more from a 2x. You don't really want to hold a 2x, but in this short move, if you're in a 2x trade, something like that, you could get wiped out 24% on that trade. So it's not really I don't want to like instill fear. That's not my intention here at all. But I do want to you know, the reason that you'll have gains in the market will be because you steadily learn and grow, and also buy when things are down. Like that will help a ton. That's kind of my main point. So AMD, while we love it, I wouldn't make any like short-term buy. I mean, we could technically and just have a plan, but ultimately I would look for a sell down here, potentially on AMD, down to that $225, $230 range. As now it's very overbought, the most overbought we've seen it probably since March 2024 right here. And that last time when that happened, that's when it kind of peaked out. And so what you would be looking at if we see that peak out on AMD, it'd be like this. Be something like this. See that level? Like that would be a massive, very conservative correction. You wouldn't want to see that 35% sell down, something like that on AMD, but hey, I mean, it's possible. It is possible. Yeah. So, all right, what are the next ones we got? Ty Hop is tuned in. Franklin, what's going on? What else do we got going on? Superborn NVTS. Okay. I think Big Bear AI was the next one. See, David went ahead and commented with Ion Q. I love it, guys. What other companies are we watching here? Wizard says, market is all-time high. Buffett is hold lots of cash. What's your take, Will? Do you hold 50% cash? I do not hold 50% cash. No, I hold probably about 20% cash, but I know people like to hold more cash. We put our cash, the biggest value. This is what happened in 2020. I was holding a lot of cash. We didn't really invest that much, and we missed. And they say the biggest investments that you miss are the ones that you lose on, are the ones you miss. That's one of those instances. How many of you guys missed out on a nice recovery in 2020? You know, even though some investments did well, like for sure, we're looking at an opportunity where at any time the markets could continue to surge for a few reasons. Number one, you have people not wanting to put money in the US dollar. They want to put money into assets because as the US dollar is degraded, you have those assets become more valuable. Or not necessarily more valuable, but worth more dollars because the dollars become not as valuable. And so assets are like going to be the number one thing you want to hold. And I'll always choose assets over cash, 100%. And then second, you got to consider the advent of Bitcoin. I know that it's not about Bitcoin here. We're talking about the top stocks. But why are companies, for example, jumping into data centers so successfully? Because they built a bunch of infrastructure for Bitcoin, right? A lot of the top data center companies are Bitcoin miners. So I guess it's kind of relevant. We see them all the time. There's a reason for that. Why was all that infrastructure built? It's to essentially have a alternative to another asset class than gold. And so I hold about 50% of my money in Bitcoin. Yeah, 50% in Bitcoin. And then the rest of it in stocks. So hopefully, I don't know if that's helpful. But if you want to know how we allocate, there you go. So I would love to do a video on more of the why for any investors that are studying. I have a friend that holds many Bitcoins, and his number one thing about the Bitcoin stuff is he says that he basically just compares it to the S&P gains. It's like, what's the average return of Bitcoin versus the average return of S&P? And it's like hundreds of percentage points versus whatever you have with S&P, 10%. So, all right, next one we got here is going to be Big Bear AI. So Big Bear AI, we did a full breakdown earlier this weekend, but let's jump into AI defense. Got Big Bear AI here. We've seen Big Bear AI hold this overall uptrend, continuing up from about $1 a share up to 10 in February. And then April, they sold back down. And they've been recovering, holding above this 200-day moving average. Kind of toying right now between this $6 price point and this resistance up here of about $8.50. And so if we're looking at the levels to watch with Big Bear, you definitely got this support level here. Right, so from a chart perspective, you got the support level down here around about $6.50. They're at $6.94. I would watch that carefully this week. They can hold that level with their earnings coming up on the 10th. That's going to be really key. Next target for them is going to be up here into this $8.50 range, like we mentioned. It's about a 25% potential increase on Big Bear AI over the next few days or weeks. And so when it moves quickly. We've seen it make that run in a matter of days. And so we love to trade Big Bear AI. So we do have long-term positions at $2.80. They're at $6.94 now. So long-term positions, it's oftentimes wise to just hold. And then shorter-term positions, it's, you don't want to have a plan. Probably have a stop loss somewhere around the $6.50 range, as that's where the previous support is, and probably just below it. We'd set a stop. And then look for that 10 to 25% increase up into that $8.50 range on Big Bear. Now, one thing to note, if we get kind of an analysis here on Big Bear, let me pull it up. The machine is getting some good information. You got a lot of institutions buying into Big Bear. Vanguard and BlackRock increased their positions by as much as 60% after their earnings. Citadel, State Street also increased their positions. If you look, though, at the institutional holders, 248 buys compared to 122 sells. Grok, when looking at this information, suggests that there's growing confidence among the institutional investors. But when we look at the insiders, it's kind of been a different story. You had the CEO selling some You had Ricker selling some, and Chief Financial Officer selling some. And on the insider level, you got more sells than buys, 90 to 28. So the institutions definitely see something here. I would imagine if we're looking at the projections here with Grok, it's currently around 692. We're projecting that they're going to get up into this 790, $8 range here in the next 6 months. I think that's quite possible. According to Grok, it's looking at the same kind of levels we were just pointing out there. But over the next day, it is looking a little bearish, according to the AI, expecting that sell down to that 675 support, and then it's a little more red there, and then into this next week expecting that 650. But here's what it's got. It says however, a short bounce from that support at 650 might limit losses if momentum indicators like the RSI stabilize. I could see that happening, which in that case looks like the next month is projecting bullish. Okay, so next kind of target for Big Bear, you're looking at around that $8 price point for the future price from where they're currently at. And if we're going to see that move play out, it's going to happen pretty quick, and probably see something of indication of if it's going to happen. We'll get some clear direction on the market into this next week. A government shutdown and then a reopen of the government will probably positively impact defense companies like Big Bear. So that's what you got there for Big Bear. Also just kind of considering their AI, they've recently expanded into more technology. They got the Panama Canal monitoring with their AI Arcus software, the partnership with Palantir, and then the massive expansion on their biometrics. They deployed to Chicago recently in an article, as well as their deployment into Nashville and JFK and LAX. TSA seems to be liking the facial scanners that they're providing. And I think that the other big thing about the data is that companies like Delta and other airlines are partnering with them to put these facial scanners at the gates of their airline gates. And so they're getting more data potentially, on customers, but also actually the experience. How many of you guys, like, you scan your boarding pass, they're like, Durr. It's like, doesn't work, and they're like, Durr, sorry, it's not working, Durr. And you're like, all right, and they're like, just go ahead, even if you're a terrorist. No, I'm just kidding. But but like, if you go through now, like, you just walk through, they scan your face, pretty simple. The problem with Big Bear in the last earnings, despite a huge recovery after their sell-off, they came in with a negative net income. NY says that Big Bear AI's financials are rubbish. Is that what he says? So I would say we can do a poll. And we could do a poll. But basically what I'll say about their financials is they came in with a goodwill impairment, which was a big accounting markdown, and a one-time payment that also affected their negative net income. If you discount those things, they barely missed their earnings per share. And if you look at their revenue, it stayed flat, as it has kind of year over year, just about 1%, 2% gain. But if you do notice their financials, I mean, you have to account for their quarterly increase in their total assets. Their assets were up 66%, and their cash went up 440% year over year. So you got to look at the cash stacking that they're doing. And you got to look at the CEO, U.S. Department of Homeland Security. He was the acting secretary there, and they actually have a partnership with Palantir, but you could see them getting defense contracts and things like that. So to me, it makes a lot of sense this company continues to grow ahead of the World Cup and some other major events coming to the US. So market cap's at $3 billion. Are they up? Is their PE ratio high? Yeah, it is. So overall uptrend, we might see them sell conservatively down to 550, but I personally think they're going to hold around this level, around 650, because the sentiment is too good for the AI defense tech right now. All right, so What do we got going on in live chat? All right. Rocket Lab. All right. Yeah, we did a full breakdown on Rocket Lab on Thursday. Primarily with Rocket Lab, you got the launches for Black Sky. Okay, so every space company is going to be measured by how well they actually deliver value, not by how cool their rocket ships are or how exciting the space tech is. It's always going to be based on how much value they're actually providing to the space market. And Rocket Lab, I would say, it's actually more valuable for economies than SpaceX. So you might say that, no, that's not true. SpaceX is way bigger. I'd have to look at the exact numbers, but SpaceX launches a lot of their own stuff. They do ride shares and you got to pay for those. But if you look at all the missions that Rocket Lab has done, let's pull it up here. So Rocket Lab, end-to-end space company. I got a friend that works at Rocket Lab. He loves it. Lived with him for 2 years. He's a rocket embedded software engineer. And if you look at the missions launched, this is where it gets interesting. Like a space tech company that, you know, is just building space tech, very cool. They might get funding. They might have some, you know, some investor interest. But if you're looking at Rocket Lab, you can just look at all of the launches that they do for all of these companies. These are satellites and, you know, surveillance and, you know, different orbital infrastructures that get put up there for, maybe it's 5G or Internet of Things. Could be related to AI driven tech like Black Sky. You saw some launches with Black Sky we just covered. They're launching for Leidos. They're launching for NASA. You know, they're launching for, again, there's some more Black Sky missions. And these are these rideshare missions for DARPA. And why? It's like, if you're looking at the value to the marketplace, they're providing a lot of value by doing all those launches, Rocket Lab. So I think I really do think they're on the right track. Financials, if we look at their recent growth, take a look at their annual revenues, really just kind of hockey sticking up. See their revenue up to 436 million in 2024. And then in 2025, you know, they're on track already to do over $500 million. So revenues increasing by 78% year over year. Rocket Lab was at $3 a share when I started investing in them, actually. And we've seen them absolutely surge up to what was $70 a share recently. $73 a share. And so, you know, you've seen them just absolutely surge up at these new heights, massive influx of capital. They recently pulled back to this previous resistance here. We were expecting them to come kind of back down to earth a little bit here to about $60 a share. They did bounce there. So we'll see if they hold hyper bullish because their valuation's still high. But again, like if they're 1/10 the size of SpaceX now and they get up to 3/10 the size, you're looking at Rocket Lab getting up into $75 a share or potentially more. So what's going on there? What else have we got going on? Appreciate you guys. Thanks so much for tuning in. Rocket Lab, we got APLD. Franklin's got some calls on APLD. Is that what I'm hearing? Yeah, APLD is building a lot of technology. Two Brothers says, can you drop Redwire into the machine? Let's take a look. Let's do it. So in the machine, you can chart your financial future. Let's get some assets lined up here. Let's click on, let's do Redwire here. Redwire. We'll get a full analysis here. Sweet. Yeah, we recently just added so you could save your widget layout. So if you add like SEC filings or market status or the earnings history or analysis or something, you can move your widgets around. You can actually save your widgets and the view will stay. There you go. So over the next day, we're projecting here just slightly green on Redwire. According to Grok, I'd like to get the Claude analysis, but over the next month, it's looking bullish. Definitely having some bullish sentiment, about 10% bullish on Redwire over the next 6 months. I think that's even conservative. Over the next year, they're expecting to get up to around that $9.15 range. So I would expect that to be very on track, but also even conservative, which notoriously you're going to have the long-term projections from Grok pretty conservative. I found the interesting thing with Claude is that Claude is a little more aggressive on the or a little bit more considerate of the compound and a little bit less aggressive on the near term. And so Claude AI seems to have an opinion here of Redwire. Let's see what they got. See what Claude says about Redwire. What else did we recently add? Got some new features on the watch list. Actually should start building out more of the space tech watch list here. Got Redwire, Rocket Lab. Probably add Lunar in there. Exciting stuff. All right, so there's projections on Claude as we mentioned here. You do have next year much more bullish on Claude as we mentioned. They're actually projecting a 30%, 32% increase on Redwire. Over the next day, also bullish. Slightly bearish on the next hour, I guess. We'll see how that kind of plays out right before market open on the machine, but overall we're looking bullish there. Leonardo says, Plug, thinking to sell out all of my shares. Plug, I don't know Plug very much. I haven't covered that stock. If I pull them up here, Plug Power, 173 million. Quarter, they're losing a tremendous amount of money every quarter. And fairly declined assets are dropping. You see their assets dropping. Something about Plug Power is having trouble. Oh, wow. I'm actually much more bullish on natural gas than I am on hydrogen. In fact, I think hydrogen would be the market to short when it comes to powering vehicles with hydrogen. I know that it's like you see a lot of companies initially invest in it a few years ago, but just for reference, when I was growing up, my dad, and he still does this, he builds all of the underground systems for gas stations. So he works particularly with Chevron a lot of different companies, but Chevron's one of their main customers. And in California, they had a lot of expansion into hydrogen in the early 2010s and in the late 2010s. You had a lot of expansion into hydrogen, and Plug Power was one of the main ones. And believe my dad, when I talked to him on the phone, because I was curious, I said, what do you think about natural gas and that market versus like hydrogen? And he said, natural gas is proving far superior for vehicle transportation and efficiency than hydrogen. Not necessarily because like it's all in all in the fuel efficiency better, but because of the overall efficiency, meaning like hydrogen might work better, but you can't power the local city on hydrogen. It's just not set up. But if you want, natural gas is already hooked up into a city. So if you turn a natural gas setup into, like, let's say a gas station or where most people get their fuel, then that actually ties into the city natural gas very easily and is seen as almost has a lot more infrastructure already built out. So the natural gas, a lot of big companies including Chevron, are moving away from hydrogen and towards natural gas. So I don't know if that's helpful, but that's why I would probably short Plug. You could also see that really in the past few years, just see that decline of total assets and rising of the liabilities on Plug Power with increasingly negative net income year over year. Net profit margins were down 117% in 2024. So yeah, that would just be my kind of outlook for plug power, but if you see something unique about it, I'm not very well versed on the hydrogen. I don't really know what's going on. I just hear things from people on the front lines, but if there's something specific you see about that market, by all means, all power to you if you want to invest in it. I wouldn't say it's like bad or anything like that. It's just I don't have enough. I don't have enough information on the market to really invest in it. I wouldn't. I do think I would invest in natural gas rather than hydrogen. What else we got going on here? Hopefully that's helpful, Leonardo. Neil says nuclear companies. Let's take a look. Neil, nuclear companies. There's my nuclear watch list. If you want to take a screenshot there on the left. Nuclear. There you go. What else? Fuel cell. Superborn. I'm not sure about that one. Big Bear AI. Did we go over Lunar? Sorry, I just got here. Freddie says we did not go over Lunar stock. What are you watching with Lunar stock, Freddie? Okay, we went over Big Bear AI. We went over AMD stock. We went over Redwire and Big Bear. Let's see. Did we touch any quantum? We went over CTM. All right. See some questions on the machine. If you guys ever want to use the machine, it's the first link in the description below. That includes a 1-year annual plan. You get unlimited access to all of the models. You can search any stock that you want with any AI company that you want. And we'll make sure that those AIs are supercharged with the best AI compliance and integratable data, whether it's SEC data, insider trading, or it's the press releases. We only go directly to the source. We don't allow any third-party agendas to manipulate the projections via news. We don't do that. But also we allow the models to function. They're completely unbiased. And our theory is that as AI gets better, so will the analysis and so will the results in growing a portfolio. So again, first link below. You look at NVTS. Let's take a look. NVTS. All right, so NVTS is a semiconductor company that was starting to get a little bit of momentum and then had a really aggressive sell back down from $17 back down to $13. From a technical perspective, maybe you got something along the lines of this here with that extra drawdown. Let's see. Don't really have much for you technically. Looks more bearish than bullish. In the near term at least. I know it looks bullish kind of in the short term, but or in the long term, but you do see this sell down here. Maybe selling back down to this level around 983. That's what I'd say on the technicals. Let's see what's going on with the financials. They're at a market cap of 2.87 billion. They're bringing in about $14 million in revenue and losing money. Could you imagine if CTM had the same market cap for that kind of revenue? CTM did 14 million last quarter with, I think, barely a negative net income. They're only at $100 million market cap. Navitas did negative 50 million and they're at a $2.87 billion market cap. It's crazy. Annually, they are seeing some balance sheet growth though. Outside investors seem to be jumping in. 2025, they got their balance sheet up to $500 million. Financials look okay. If I'm being honest, it looks quite overvalued on the financial side. PE ratio is pretty high. They don't have a ton of assets compared to that market cap, at least. What I don't see in Navitas is the distribution from them. I see all these other articles that are on Yahoo Finance and this about how this is such a great company. And I see a lot of people hyping them up on like YouTube. But they're supporting NVIDIA's next generation AI factory computing platforms. And they built specifically for NVIDIA. Not for NVIDIA as NVIDIA requested of them, but for NVIDIA to integrate with NVIDIA. They're focusing on AI data centers. It seems like the perfect market, but I remember there's just being like a lack of contracts and revenue. That's kind of what you see. Despite that, though, they've been able to grow. Semiconductor market is obviously bullish, based out of California. So maybe I'll drive over to California next time I get home. I'm in Buenos Aires right now, but I'll drive over to Navitas to see what's going on here. As I live in California. I'm not too far away. But something about the company I just can't get a grasp on. Like, I've done research on them. I just don't really see it in their financials. But I know they're in the right market, but then I don't really see it in their product, or at least it doesn't sell me. And so I don't know what it is. Maybe I just need more. I need to talk to somebody. Let's do like a podcast. You guys want to ever help comment on some YouTuber or send them a message that is covering Navitas? They have a very good understanding of what's going on. They have to have a good understanding. If it's just like a hype video, like 90% of videos on YouTube, then don't tag me or anything. But if you find somebody that is seemingly very, very well versed on what Navitas does, send it over to me. Maybe we can make something happen, because I'm just not sold on it. You know? Franklin says, Lunar long-term, you should dollar cost average. I'm bullish on Lunar. They're building infrastructure on the moon. Super cool. Awesome, guys. Hey, I appreciate you so much. Thanks so much for tuning in. You know, guys, with the schedule and everything, it's actually about 12:26 a.m. here in Buenos Aires. I know normally in California it would only be about, what, 7:30 or 8, which is totally fine. But I'm actually so tired. So I appreciate you all. Thanks so much for tuning in. I'm actually really excited for Market Open tomorrow morning, though. We'll be there as we are Monday through Friday. If you guys want to tune in live, it's the second link in the description. We had some massive adjustments. I would be excited to share with you guys really quick, actually. If you want to stick around, great. We're not going to go over any other ticker symbols. Maybe indirectly we can. But the value that we're providing in the machine here, I just wanted to show you, we got some new things added into the watch list. We can now sort by color coding. I thought this was really cool, and I think every brokerage should do this. That's why we built it. If you're looking at stocks, you could see and sort by the stocks based on how big of a return they had, and see the color. So brighter green would be, you know, more of a return than not so bright of green. Same thing with red. So like not so red is like closer to 0 versus like very red is going to be like more red. And so anyway, we added that into our watch list. And then also you could search any, oh, you got On Semiconductor, Taiwan Semiconductor. We could add, let's add NVTS. NVTS, see that green there. And so we added a new feature too that we're going to be rolling into this week, which is generating watch lists. Generate a watch list via AI, whether it's Grok or OpenAI, ChatGPT, or Gemini, or what have you, to do the research for what you're looking for, the criteria, and then generate the watch list using AI. And so we're adding that very soon. I'm very excited for that feature because I actually want to update my watch list even more. I know that we have like very organized watch lists. You guys see the semiconductors, you know, data centers, and I don't really try to organize them. I guess it just happens because of how we analyze and just through the years. It's just become very organized, I guess. But I'm adding this feature too here with our team. We are going to allow you to import a screenshot too. So if you're moving over to our machine for your AI analysis of companies, you can just take a screenshot of any watch list and just import it. And then it will auto create the watch list for you. What else did we add? Michael Costello had a really great thing he was looking to add in here. Steven, appreciate you. Marcin, appreciate you. Will you ever consider giving lifetime access to Mercatus? No, the features cost a lot of money actually. So I couldn't do that. I could give lifetime access to features that don't require compute. But like if you wanted to go get AI, like we use the most premium models. We don't skimp on models. In fact, we're even integrating very soon quantum computing analysis with like D-Wave and IonQ and Rigetti. And that's not going to be cheap at all. And we use the most premium models in the world. We use the premium versions of Claude and of Gemini. Like any model that you see here is the best model and latest and greatest that's available. So yeah, there will never be I don't want to say there will never be. How could there be lifetime access to Mercatus? You could become an investor in our company. I'd say our investors get lifetime access, or you could become an employee. So if you're an employer of our company, our employees use this all the time. So yeah, that's probably the only way that you can get access lifetime. But like I said, like if you want to go get these models on your own, let's see, OpenAI is $249 or $200 a month. Grok is $300 a month. Claude, I think they're around $200 a month. And then Gemini is $249 a month. So that right there is right around $1,000 per month. We're offering the machine in its beta for full access for as many generations as you want from any asset. And you can get full access for the entire next year, this entire year, to unlimited models and get a membership to Stockmate for the daily live trading. And it's only $14.97. So rather than paying like over the course of a year, what would be probably around $9,000 to $10,000, you could get it for the entire year for under $1,500. And that's including lifetime access to our daily live trading sessions in Stockmate. If you're in Stockmate, you get a really good deal as well. If you're a Stockmate, you could always send me a message. I could send it over to you. Or you could use the code. It won't work unless you're a Stockmate. But the code is MATE550, MATE 550. And if you go to the first link in the description, it will give you access for $550 off with code MATE, MATE 550 for the machine. Great, guys. So we went over a ton of ticker symbols. I appreciate you all. Thanks so much. Franklin says, I set up my portfolio for 4 years, good quality companies, and just keep dollar cost averaging. Awesome, man. I'm glad it's going well. Time to get some sleep. Palantir after hours. Awesome. See you guys tomorrow morning. If you want to tune on in, live session, second link below. Appreciate you all. Hope you have a great rest of your Sunday. And I'll see you in the next video. Hit the like button if I earned it. Do consider subscribing, guys. See you. Take care.